anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Good morning, everybody. I think Alan said it best. Save Tradely. Yeah, that's what I do every day. Save Tradely. Markets are slow. I think that this is the calm before the storm. We'll have some exciting news on Wednesday, Thursday, Friday. CPI data, PPI data. See what the combo is. We have the Fed next week. This might be a really simple look, but watching pretty much this. I mean, I'll go to a chart that shows some technical resistance / overbought conditions, divergence. I mean, all the alignments are right there, but I keep going back to this. If we don't take out a low, if we don't take out a low, if we don't take out a low, the bears aren't participating. Like this is all bulls. This is all melt up. I think that it's overextended. I think that's expressing itself on the charts a lot. The market has slowed down quite a bit, but this grind continues. And this grind is fine. So I still think it's a buy the dip. I think that I've been looking at, is it Ives? Yep. So Dan Ives is putting together like 30 stocks that this kind of just came out. So I don't know if this is going to be the greatest thing ever. It's just a way for this guy to make money with basically an ETF. But the whole play, I think I'm going to look at a trade on Micron. Gosh darn it, this thing's just running hot. So does Micron get back to highs at 157? That's up another 38%. That's not bad. One pretty cheap way to trade this would be, okay, let's see if we get to all-time highs, 157. Let's go Micron. If I went out, let's say to the end of the year, either December or January, Micron highs. I just want to see if I can take like a cheap credit spread. So if I do like a 150 by 160, I want to see what this fills in to be. So for $1.72, I can make 820 bucks. Like that to me is a pretty cost-effective trade. If Micron gets back to these highs, it's a really good asymmetry trade. Now, I realize like there's resistance here. It's kind of struggled. It's like 113, 114 handle. I'm going out far enough that I don't need price necessarily to blow through the highs. I just need price to keep going up, right? So, if we have a pullback, I'll probably do more 1-1-1 trades here and look to participate. But this is a cost-effective trade that if I'm right, it offers me like 3-to-1 or 4-to-1. Okay. So I don't mind a trade like Micron. It's not that expensive. AMD, kind of the same type of thing. Does this stock have what it takes to run back up to like two and change? Maybe, but Micron looks pretty good. In fact, let me look at the fundamentals here on Micron. So Micron, just make sure I'm not jumping ahead on some fair market value stuff. Snowflake looks pretty good. Checks a lot of boxes. It's not terribly expensive at this point. This is kind of the hardware side of AI. I don't love this, right? Like current price 111, trading at 113, fair value is 75. I don't love that. Compared to Qualcomm, it's like it's kind of cheap. Qualcomm is what? C? It's QCOM. So 157 with highs at 230. Well, Micron is getting some love. So a couple ways to consider this. Either one is I buy the inexpensive, debit spread that I pay 175 bucks to make 825. The reality is if I turn that 175 risk into like a 175 winner, that's a 1-to-1. If I turned it into a 350 winner, that's 2-to-1. I can potentially make more than that, right? So if I held it all the way to expiration towards January, max profit would be 830 over 170. It's about a 488% return on risk. It's not a bad potential trade. But for me, because that asymmetry is so promising, I don't want to necessarily hold it all that time. If it gets up, like I said, if 170 risk becomes 170 in profit, 340 in profit, that's pretty good to just take the profit as prices cooperating going up my way. Okay. So, couple things. I'm going to look at if I can get maybe a ratio spread back down below $60. I don't think I've already taken profit on a couple of micron trades this year, and I do not have it on the portfolio right now. So let's go. I don't know what the option prices look like. They might be okay. They're not bad. If I'm seeing dollars in here for the premiums, it's not bad. Working order. Oh, I already put it in there. So I have the trade. I'm looking for a pullback. All right. I guess I'm a little smarter than I thought. So I took the trade. I took the trade already with a pending order based on a potential fall. So initially I did this. So if we pull back, I could just take the trade now for about $1. But if we pull back and we have like a VIX increase a little bit, I would, instead of just pulling in $1, like if I did the trade right now. So let's say I do like a 65 by 60, just throwing it out there. This is a 6250 by 60. So this is the trade that I put in. A 6250 by 60, make this a ratio spread, I get $100 of income. Okay. So this isn't a bad trade. What I'm trying to avoid is if I, deploy these trades now at $100 and the price is going to drop. Let's just say we go from like a 113 down to, 104. Well, that's an extra $1,000 of risk. So I do this on, 15 accounts, and that's $15,000 in a drawdown. Even though the probability of profit is still extremely high, that's a 15K drawdown. If we pull back to $100, that's $1,300. That's $13, $14, $15,000 in drawdown. So I don't necessarily want to see that type of drawdown, even though the probability of profit remains very high. But I'm just curious if this is going to be like is the market just is all the market cares about is just get this trade war settled. It's all about AI. It's quite disruptive. So I mean, can we get to these highs? Possibly. So I think, to me, it's like I'll do this. Let me see if this is cost effective. I'm gonna go out a little bit farther. I mean, if we're truly getting like an AI run, let's go like summer of 2026. Can we get through this like liquidity pocket? Is AI the greatest thing ever? Let's look. 150 to 160. I want to see what this trade cost me. What? It only cost me $1? There's no way. No. Okay, never mind. That's what the ratio spread. So 50 by 160. Okay, so it cost me $2 to make 8. Right? $2 to make 10 gives me net profit of 8. Give this some more time. If we go up to all-time highs and exceed it, I think this is a pretty good trade. Paying $290 to make, what's reward to risk? So 1210 divided by 290, that's a 417% return. It's not bad. What are the highs here? Highs at 157. So if I go 155, 165, that's not bad. 230 to make 1270, or 150 or 804 to make 804, 196. So 400+% potential. Not a bad trade. I don't mind this one, which is slightly larger. So 808. That's 420 versus 250. So go 1250. All right, I'm going to do this one. So I think for 275, it's a pretty good trade there. And my goal is to turn this debit. If I'm risking $270, my goal is to turn it into a trade that offers me $270 to $540 profit or more. Okay, so let me see if I can get filled here for like 250 on this trade. Let's see if this will fill. So 250 not filling. Let's try 255. Just above the ask or the bid price at now it's 260. All right. This might be a little more slippery than I want. Hopefully we're not paying more than like 275 for this trade. 265 not filling. 270. Come on. What? All right, just got filled at 280. So that trade's in 280. I'm going to take this for, I'm just going to highlight the accounts here and just knock them out one by one. Not a bad trade, not a bad trade, not a bad trade. Okay, so everyone's going to get some love on this one. That was filled. So similar order. I should see this pop up in all of these accounts. Yes, so 280 is the fill. Okay. All right, a couple more counts, and then I'm good. Okay, so I'm gonna add this into Pulver alerts. What the heck? See if I can get this filled at 281. Yep, 280 got filled. All right, that's fine. So now, let me find my tracker here. Put this in. So this is Micron. Buy the 155 call, sell the 170 call, paying $2.80 debit for a $15 max credit. Okay. So basically the trade is up here. If we see price, appreciating, that is good. If we get back to all-time highs, that's even better. So this is a trade that I'm looking for. We get here. It's a nice win. So that is the 155 by 170. So 155 to 170. Okay, so that's the trade. So there's two ways that I'm trying to play this. Okay, one is cost-effective debit spread that gives me, potentially $15, so $1,500 of profit for a 280 debit. And then the other side is if we get a pullback I'm trying to set up a ratio spread down here with a 62 by 60, which means I would be willing to own the shares at the lows. So if price goes up, this one looks good. If price comes back down, I get filled on a ratio spread, and we'll see what that result. I mean, I don't mind owning the shares, but I'm going to own them cheaper. I don't want to buy it at 114 bucks. I want this to go up and try to hit some all-time highs. Okay, so I'll get that posted in Pulver alerts right here. So Pulver alerts, stock option trades, new trade. Micron, make sure I get the expiration correct. That was a 6/18, yep. So buying the 155 call, selling the 170 call, 280 debit for a $15 max credit. This is an out of the money debit spread. And if MU is nearing all-time highs, looking for this trade to offer 1-to-1 or 2-to-1 reward to risk for profit protection prior to expiration. Okay, so build that trade out, copy and paste, Pulver alerts in 10 seconds. There we go. Posted. Okay, that's a little Micron. We'll keep an eye on that one. Also have the pending orders for that that pullback. Markets again today, pretty calm. Like I said, calm before the storm. Watch that rising wedge. There's going to be some, I don't know, there's going to be something exciting happening this week. I just don't know what direction. Whether I mean, if we get the market excited about better inflation, maybe it prints hotter. Maybe the market doesn't like it. We've been watching the kind of the truth reading for a little bit. We have been elevated off these lows a little bit. So, down here at like 1.22, now up to 2.08, fading a little bit, but still, we've come off the lows. We've had headline CPI hit a bottom at like 2.3%. It's forecasted for tomorrow to print at 2.5. Okay, so if you go to the Bloomberg calendar, that's what I'm looking at. It's basically Wednesday, Thursday, and I'm just watching the year over year. That's what I'm interested in for tomorrow's data is the headline CPI year over year and the core CPI year over year. Both are expected to be printing slightly higher. So your core CPI year over year right here. Previous is 2.8. It's forecasted for 2.9. So market's anticipating a slightly higher print in CPI. And then you go the headline CPI year over year. Previous was 2.3 and forecasted for 2.5. So both expected to see higher CPI prints. Now, if the market prints tomorrow, let's say that we print 2.4. So headline CPI is slightly higher than previous, but better than expected. Maybe that's a good thing for the market. I'd say maybe the downside would be if we print like a 2.6 or higher, right? Or this prints like 3% again or higher. I don't know if the market's going to take that with a lot of, a lot of positivity. I don't think anything is really going to derail this market. I think if anything, what you need to focus on is this market going to offer up dips? That's it. In this environment, if we're going to spend $2.5 trillion and pass a tax bill by July 4th or by Independence Day or whatever this, 11th hour holiday is going to be for Congress to pat themselves on the back, any pullback opportunity to me is a chance to position options for income or, generate. It's like if I'm going to own something, I'm going to own the SPY like way, way, way lower. Otherwise, I'm just going to look at income trades. Okay. What up, dude? So anyway, any dips, that's what I'm looking at. I don't know I don't know the why. Like if this pulls back, why? Is it higher inflation? Is this something that Trump said? Is this something with this 90-day pause? Who knows? There's going to be a ton of reasons why we can see it. while it's happening or after the fact. I just think that we need to be ready for, if we have a pullback, I'm ready to take some action. I'm going to deploy some capital. Okay. If we have a pullback, I'm going to take some action. I'm going to deploy some capital. If I'm going to own shares, I'm going to own shares at the freaking bottom. So I don't care if I just do naked puts. If we have a pullback and I sell a put right here, probability of profit is extremely high. I might have to sit and navigate a drawdown, but if we just go sideways, eventually that time decay works in my favor. And if it's a SPY put or a Q's put, maybe it's worth a couple $100, right? Out 40 to 60 days, maybe I grab another $300 to $500. Do that on 15 accounts, make another $6,000. Okay, like I'll do it. If I'm gonna like buy the SPY, then debit spreads, right? Like look at some debit spreads, try to get back to all-time highs. I kept asking this question, but we're right here just shy of those all-time highs. If this market turns right before we get to these highs, I'm happy with that. Like I want to see a turn before we get to all-time highs. But I don't think it would surprise anybody to see the market blow this high out, okay, or test this high and then fade a little bit. Okay. And I say a little bit because, like, above these moving averages, the bulls are absolutely in control right now. And even a break of this trend line right here, even a break of, let me zoom, let's go 4-hour chart. Okay. Even a break of this trend line here. Okay. That trend line is a bit more aggressive. I would go slightly like that. Like that trend line, connect the low here on the right side of the trend line, connect the low here, connect the low here, all these support levels, like that's the trend line I'm watching. So that gives us a chance to see, okay, is this a rising wedge? Maybe it is. But nobody's going to be shocked to see this thing melt up higher, 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 poke the all-time highs. And like I keep saying, if the bears take out a low, then this market's interested in some type of correction. I don't necessarily want to trade that outside of maybe a cheap hedge. A cheap hedge at the top, take a $250 to $500 risk, try to make 3 to 1, 4 to 1, 5 to 1, whatever, and do that over like a 90-day window, maybe 120-day window. That's kind of it. Because other than that, it's like, I think it's just any dip we're offered is a chance to buy the dip, and this market's going to melt up. So, I mean, what's our big drama point? Well, we got inflation news this week. See how the market reacts to it. Then we get into the Fed, and then all of a sudden it's like going to be the end of the month, and it's holiday time, and then it's this big beautiful tax bill, whether it's going to be passed or not. I would assume that it's going to be passed, simply because it's. I mean, you have a president that would go so vocal and so ballistic if it doesn't get passed because it's going to derail the agenda. Even though that agenda is adding $2.4 trillion and this whole idea of Doge and austerity is crap. It's still, how vocal he's going to be, how threatening he's going to be if this doesn't get passed, right? Like he'll put everyone on blast. So anyway, that's what I think. Any dips, I'm looking to position options. If we hit the all-time highs, don't be surprised. If we have a pullback, I think it's an opportunity just to reposition for some more income. This market is just not turning over, right? This little Elon Musk and Trump drama last week, not turning over. Like we had a, but what to do the next day? Gapped higher. Like this was like Musk and Trump drama, and the market ended up gapping up over 1%. It's like it doesn't care. It doesn't care right now. So until these lows are taken out, the market doesn't care. Okay, I'm going to adjust this trend line actually to this. There. That trend line to me is a little bit more in line with how price has been behaving. This support back on the 7th of May to the 23rd of May to the 30th of May. So there, if we take out any of these lows, then yeah, the bears are likely going to get the control for a moment and try to get some pullbacks. But we're probably poking all-time highs first. I mean, is today, what's a 6,000 credit spread today? I'm just curious. So we're above it. I feel like that could offer up some potential support. So what's the 6,000 handle today? It's not a terrible trade. 5 wide, get a $1.30 if we stay. It's a 6,000 handle. Let me see if I can get a broken wing put fly in here. Butterfly, put fly. See if I can pin this thing around like 50. I don't want to be super aggressive here, but if I pin this thing around like 6,000, 30 cents credit with a profit trap. 65. It's not awful. Are we going to break this level? This could be a trap at the end of the day. 20 delta. Let's see. Do we just hold the 6,000? So 5 wide. Let's see. I kind of like the butterfly angle if I can take it. I mean, I think I'm going to take a butterfly today. So if I went to, let's go 59, 95. Gosh, I hate this trade. I hate like 30 to 40 cents. I don't make a lot of income on the trade. I've got a trap, which is, my warm and fuzzies of if price were to come back down to the 6,000 handle by the end of the day, that seems to help. I just think this market's going to be, I mean, we broke intraday highs. We broke yesterday's high. Is it just more of a melt up? I mean, I've got call sentiment that's way higher than put sentiment right now. There's not really a resistance handle until like 60.50. Here's what I'm watching for some of my levels. So we have, 60.40 today, a 60.50 today. Choices. Do I like this trade? I'm going to take this trade here, see if I can get filled for, maybe I can get filled for, let's see, $1. This is wishful thinking. I'm going to take this trade for $1. My risk is going to be about $400. I'm going to see if price will stay above 59.95 today. So this is a pending order. It may not fill. If price melts up this morning, it's not going to fill, which is fine. But I'm going to put that trade in. All right, let me get some questions. Lee says, what do you think of dollar CAD on the day chart? Level support to me is like 3,200 to 3,000. So we've got to be dropping. Yeah, it's not low enough, man. I don't think this thing's low enough. To me, this is support. 3,400 is my support. 3,000 would be like the ideal support. But I would say, this level or this level, I would just wait. Oil's looking to potentially break out above the 65 handle. That could push dollar CAD a little bit lower. Between 34 and 32, that to me is a much stronger support zone to buy. So I don't see this as support. This is just kind of noise. I'd rather buy it down here, 34 to 32, or wait for a trend line break. Currency strength chart for the day. An interesting move on the pound today. Aussie's getting a breakout up. New Zealand as well. Euro. I'm sorry, that's CAD. So Aussie CAD on top today. Swiss dollar, yen in the middle. Pound got beat up a little bit this morning after the 2 a.m. open. So there's your London breakout. Just a big move on the pound. I mean, I say big move. It's like 25, 45 vertical axis. It's not crazy volatile. It looks like it's out there. I mean, even yesterday, like very quiet in the Forex side. I do wonder if the Forex market gets a little bit more exciting in 2025. So far, it's been outside of your big dollar move. I mean, the dollar has been crushed all year. Outside of your big dollar move, I don't know if the Forex market is going to get super exciting unless it's something on like more dollar basket, more yen basket, and maybe gold gets more exciting for the Swiss. If we get a pullback and hit that 200 moving average, I'd like to see the Swiss get a little bit weaker so I can get my carry trades to pay out. Pound yen, I'm seeing the pound yen come in. Pound yen, just noise. I just see noise. So, I mean, resistance would be previous highs, support. I mean, it's just noise. So if it's gonna, I mean, pound yen to me is a scalping currency. It moves enough from London session to U.S. session. It moves enough. It's like align your time frames, get your 1 minute charts up, and see if you can scalp that thing for some precision. That's I mean, most traders I've seen that have success with the pound yen are doing that as opposed to like these big position trades. So if it's lined up on the 1 hour and the 15 minute and the 5 minute and the 1 minute, just looking to kind of follow alignments and keep it simple and try to grab 10, 20 pips. Currencies can move. This currency probably still moves 100 plus pips a day. Okay, so all right, what else? Let's do, speaking of dollar, let's go dollar, oil, gold, silver, some Bitcoin, do some individual stocks if you have them, do some currencies. Dollar wise, still pretty choppy. My euro dollar position is still running. So I'm up about 230 pips. I'm trying to get a poke up here towards the 15 handle, fit 1.15, 1.1550. That's my take profit. So I'm going to hang in there. Dollar index, I still think just be careful of selling into these lows. To me, I think this would have a bear trap written on it. If it pokes the lows and it's a bear trap, it wouldn't surprise me if we come back and range trade. Same thing in the bond market. I could see it being a bear trap. I think there's a lot of consequences if the bond market ends up going lower. So, TLT at 85, it's like it gapped up today. It's fading. It's just hanging out right here. I mean, again, this could be a bear trap where we have lows, right? We have lows. I know there's some like perma. It just depends. I mean, maybe this is a really crowded trade that's like everyone's buying TLT and it has to flush them out first and then it reverses, right? I mean, there could be some manipulation on that trade, but I would think that if this level holds, it's going to be really critical that it holds and we just have a bit of a squeeze to the upside. Could be a short-term squeeze on bonds, right? Two things, right? Bonds squeeze up, that means yields can drop. If bonds squeeze up, you got to wonder if that brings the equity market down. Like, is this going to be a safe haven move at all? Because if we have safe haven and it pushes bonds higher, that brings yields down, that brings equities down with it. So if that's the alignment that we have or the correlation for a pullback, okay, maybe the bond market gets a little bit of a squeeze. Okay, so got to watch the dollar, got to watch bonds, gold and silver. Here is, let's go oil. So oil, like I said, starting to break that 65 handle. The resistance has been pretty consistent at the 200 moving average. So if we get up to the 200 moving average, okay, fine. This is another reason you want to be watching inflation. What happens if we're breaking above 68 to 70 bucks? This has to be a higher inflation environment, if you ask me. If oil is up and energy prices are getting a bid, this has to be a higher inflation environment. This is part of the reason I think inflation has cooperated so nicely, is oil has been suppressed, and pushed down to lows. And all of a sudden, if oil starts to let loose to the upside, I think that's going to potentially spur inflation all over again. Maybe not to the tune of 9%, but certainly to make it sticky where we're not getting down sub 2%. Okay, so I was talking about being long oil in here when we had that test. That worked out pretty well. I still just didn't love oil. I think it's still very volatile. We could, hit the 200 moving average and turn right back around, and it just proves that this is still like heavy resistance. So I'm not quite taking the bait on this thing going higher, but if we are, spending some time above the 200 moving average and pulling back, that could be a good spot to look for some follow through. Are we going to $100 a barrel? Probably not. But I'd say between, I was surprised to see this floor break and immediately hold like 55. So maybe again range bound trading. Maybe it's like a 55 to 75 ish. Like maybe that's our range on oil. I honestly haven't taken a trade on like CL, like oil futures or oil, for a while. And I probably won't. I think gold is better, silver is better. They're easier to read. Other commodities are better. I'm just going to stay out of oil. I think there's a lot of supply and demand manipulation. There's OPEC. There's demand with U.S. China. Does the world need it? Do they not? Are they moving away from it? I don't know. It's a weird instrument because ultimately I feel like the world's trying to move away from it, but yet it's integral to current energy infrastructure. So I just don't have a clean read on oil. Natural gas, I'm still selling calls. Let me see if I have this one out. I don't think it's expired, but let me check. So I have the 17 call out to July, or I'm sorry, June 27th. So out 17 days, trying to sell the 17 to turn this into some income. Small income. Gold. I'm still hoping for a pullback into, it may not be a pullback. It might just be consolidation. We might just consolidate here, right? Price can just kind of grind up higher, grind up higher, grind up higher, hit resistance, come back down again. But if my moving averages, this is a 100, this is a 144, this is a 200. If they catch up, that to me is a justifiable, like, okay, we tested. We didn't really fall to it, but we tested it. Okay, so if we at least test this 200 moving average, that to me is a buying opportunity to still remain long and position for, kind of a store value, anti-dollar, just different reserve, different store value than the dollar. Okay, Mario says, should I sell my Bitcoin? I would say no. I'm not selling Bitcoin. I think Bitcoin can pull back, but I think Bitcoin has, plenty of upside potential. 125, 150. You give it time. I think that this becomes like a game theory, self-fulfilling prophecy. If the fiat system breaks, Bitcoin offers a pretty strong alternative. I mean, we're at like 2.1 trillion market cap on Bitcoin. I mean, if it gets to, what's gold's market cap? 8 trillion, something like that. I mean, what's the market cap of the bond market? 5 trillion, 10 trillion. I mean, if Bitcoin takes just chunks of those, it's like there's plenty of price appreciation. So I'm not selling. I am only accumulating. All right, we good on gold. So I mean, consolidation is kind of what's happening now. Silver's outperforming. That to me has been, my trade I've been beating the drum on for months, and it's starting to show promise. So I mean, I think that silver naturally like runs up hot and then it pulls back, which is fine. So if we pull back into, this previous resistance zone, let me draw a straight line here. If we pull back into this resistance area, is that going to offer some support? I think that's a good trade. So does silver pull back a little bit and then we continue to go higher? I mean, that's what I'm looking for. I want to see higher highs in silver. Okay. If it pulls back deeper, that's fine. As long as we don't take out like 26, I'm still holding silver. But I'd obviously like to see this continue to make higher highs and higher lows. The chart to me looks pretty good. So whether this is, is that a channel? Like so? Is that a channel where it's, up, pull back, little noise here, up again? Does it pull all the way back to this channel? Still supported, but maybe it's going to be the slow behavior, which is fine. Or could it run with a little bit more conviction? Maybe it runs up here, just a little bit of a flag pullback, and then silver's off to the races with some open space. Greater than 40, all-time highs at 49. That's ultimately my profit target right there. Okay. So, and I say profit target, like, I want to hang on to it, but I don't know. That's a good trade if you ask me. Taking this from basically basing my position all the way back here, adding to this exposure, accumulating some more, and then hopefully getting the benefit of all that accumulation into a run into $48, $49. So I think silver looks pretty good. Bitcoin at 108. What was that news there for Blackstone? Major opportunity, eyes $500 billion. Oh, Europe. That's just cheap. Yeah, buy Europe. Okay, I get it. Let's see, Lockheed Jet deal. Okay. Interesting. JP Morgan says sell Tesla. Well, let's see what robo-taxis look like in the next 3 months. I think Tesla's still a buy. Also, we talked about this during the quarterly expiration for like the OPEX cycle in March. We're coming up to April, May, June. That's Q2. By the end of this month, we have another OPEX cycle for the quarter, the month, and one thing that's going to be interesting by the end of the month is SPX. If we've talked about this before, I want you to write this number down: 5905. Okay, this number is supposedly the range on JP Morgan's kind of quarterly collar trade. So when I guess it would have been force trade either March 30th or April 1, it would have been establishing like new levels. I don't recall what the option chain was. I feel like I wrote it down somewhere, but it was it's basically like a 20 delta out the quarter. So you're going out about 90 days and you go about 20 delta. So, put side would have been down in like the 47s or 48s. And the call side probably up here. Like this is the number that I'm reading on some of the gamma stuff that I've been seeing in the markets, 5905. So my point is by the end of the month, just throwing this out there, and we can come back and reference this just because we talked about it. But by the end of the month, don't be terribly surprised if by the end of the month the SPX is down to 5905. So we're trading at 6020 right now. We might go up to hit these highs, but by the end of the month, I wouldn't be shocked to see this thing get to 5905 or lower. I still think it's a buy the dip, but this avoids the delta hedging to hold these things higher. So usually these numbers are huge. Like this is a monster gamma level 5905, and I think it's something to pay attention to. So just throwing it out there by the end of the month and this quarterly monthly cycle that we have for option expirations. If we're below 5905, I'm just going to put this on my chart so we're referencing it. So end of June 5905 JPM call side. Okay, I'm just going to make a reference to that because I wouldn't be surprised to see the market either one, get up to these highs with a melt up and then fade back down, get back below 5905 before the end of the month. Wouldn't surprise me. Or it gets down here first to stay below 5905 by the end of the month, and then July continues to take off with a bullish trend. Okay. S&P. The heck's S&P? Is this a thing? Snap. What is this? Is this anything? Or is that a typo? Chloride, chlorine, soda, bleach, chemical, automobile. I don't know. Is that even a thing? Oh, S&P. Oh, there's this. You can type in S and because they are. It's like S&P has been positive off of this like reflexive pivot from the Trump administration, and gold is basically taking its play from a weaker dollar. So it's not that hard. Correlations don't have to make sense. Gold is sometimes seen as a safe haven, and other times it's seen like this year, gold has kind of reasserted itself as an asset as opposed to a safe haven, right? Like gold is an asset. So rather than owning dollars, own gold. That's why gold's bullish to me. Okay, S&P, because everything is pointed towards trying to get this market to go higher. How do you do that? Well, you don't cause a global trade war. You pivot on that. You try to get this negotiation garbage. And here we are, back above a lot of resistance levels, and the market is drifting higher. So S&P can go higher, gold can go higher, Bitcoin can go higher, risk appetite, like risk on can go higher. That's the thing. I'm still a dip buyer for most of the S&P and the Qs right now. I think Russell is making a pretty good little comeback. We are on the right-hand side of this trend line. I wouldn't be shocked to see a pullback here, but having a Russell pullback that gets us into, this level. I'm not drawing that very well, but somewhere in here. If we pull back to this area, I think that's not a bad spot to look for some accumulation, even if Russell is boring. Still accumulate, but will Russell end up making a catch-up trade? Maybe, right? Price to earnings on Russell is a lot cheaper than price to earnings on S&P. If we see rate cuts later this year, maybe that helps spur the Russell along a little bit. Maybe. So there's the point here is like if the S&P hits all-time highs and the Nasdaq hits all-time highs, and the Russell's still 14% away, money's going to go where it has opportunity. We're still 14% away from those highs. We've got all-time highs in Europe right now. We've got all-time highs in the UK right now, or close to it. We've got flows like non-US. Everything non-US is done pretty well in 2025. But a stable US is a good thing. So anyway, Let me see what that broke wings butterfly is doing really quickly. See if that has any chance of getting filled today. Trading for a whopping 17 cents. So most likely not going to get filled on that, unless maybe I get filled for 50 cents. But yeah, I think this market's just trying to melt up towards like 60.50. All right, anyway, that's S&P. S&P's up. Russell is pointed higher. I think Russell looks good. Even if we have a pullback here, we're above the moving averages. A pullback, not bad. I mean, is Russell just going to be an awesome index? I don't know, but it's 14% to get back to the highs versus 2% on the S&P versus 2% on the Nasdaq. So if there's a catch-up trade, that's a pretty good one. If small caps close the gap between large caps, that's a good one. Is it the best trade? I don't know. Not really. IWD, this is top 1000, so you get out some of the crap. Here's top 200 growth, and here's top 200 value. These are doing way better. These are way closer to the all-time highs. So if you can you've trimmed the fat out of the Russell, you get the cream of the crop. You're getting a lot better performance. You're a lot closer to all-time highs on top 200. So it's not as good with option trading. I'm still, I bought IWM for covered calls. I'm still going to keep rolling those covered calls. But for the individual buy and hold, like this is a much better alternative just because you're getting rid of so many companies that don't make money. VIX, by the way, congratulations. We just witnessed the largest volatility crush in history. So going from this to these teens, that is the largest and fastest move to the downside in volatility index history. Doesn't surprise me, but something that just makes like that event in April, March to April, makes that event even more noteworthy for that April 7th bottom. Move index bond volatility has been decreasing. We did oil, we did gold, we did silver, we did Bitcoin. Bitcoin is at 108, pulling back a little bit. I'm gonna set a chart on here at the 112. Do we break some fresh highs? Let's find out. Okay, maybe some of this, maybe up, maybe a little consolidation. Maybe this is a bull flag. I'm hoping that Bitcoin is not this. I'm hoping it doesn't pull all the way back to 75 again. I'm hoping this is up, a little sideways, and just more of a bid. More to the upside. Ethereum, I mean, it's looking better. I've said this as a look. If you're a trader, Bitcoin is like, to me, that's an investment. Ethereum, with this potential catch-up trade, I like this trade. If you're long long Ethereum, area 1, have a little reserve status for area 2. Don't take out the low. That's your stop loss on the swing. And if this goes up and catches up, that's a good looking trade. I think it's a good trade. It's a trade. I'm not going to hold Ethereum long term if I want to take this trade, but that to me is a good swing opportunity. Copper, we'll see. I've got a lottery play here in this little green zone. If we come back to this, it's like a $90 risk for a $1,400 reward. I have to see copper go choppy. Japanese yen still long. I'm still long with FXY. Nikkei, let's check the Nikkei. Pulling back a little bit off these recent highs. Let's set another chart alarm here. I'm long shares of EWJ. So I want to see if the Nikkei can continue to grind higher. This is the basically the top 85%. Well, that's a lot. It's basically getting rid of the bottom 15% of the Nikkei 225. That's why this ETF looks better than this. We're still way above this, the July breakdown we had in the Nikkei last summer. This was July to August, and we're still way below those levels. Does the Nikkei play catch up at all? Well, if so, that's 11%. Can the EWJ, get the same type of pop to the upside, get another 10, 11%, but go from 73 up to 80? Well, I own the shares at basically 65. So I'm going to hang on to this one. DXJ, another one to trade some Japanese yen. DAX, I'm looking for a pullback here for DAX. I'm playing the Fez, which is just the Euro stocks, selling some puts. FTSE, just shy of these all-time highs. I think this would be a good-looking bullish pattern if it's offered, right? If you have a low, high, a pullback in here. Does this market offer any type of accumulation before it goes higher? Maybe. Maybe. Um, I mean, I've heard a lot of different opinions on, UK, whether it's a strong economy or not. I still think like this reality of a non-US year, like having a lot of things outperform the US because it's just not that expensive. Euros, like the Eurozone price to earnings is like 12. US S&P price to earnings is 22. It just naturally means like there's more upside potential with a cheaper price to earnings than there is the S&P. The S&P is kind of priced to perfection. Things have to go really, really, really well, and I think it's okay. But I've showed this. We'll talk about this more next week in our little half year review. But historically, when the market is at 21, 22 times earnings, 1 year to 10 years out, the returns are not that great. So unless we have, another melt up where we get to 23, 4, 5 times earnings, and all of a sudden it's like, okay, a correction is very, very soon happening. Or we have like a reset where we get back to like a 16, 15, 14 price to earnings, and then things all of a sudden return to be like everything's on sale. Okay, I do want to check one thing really quickly here. Give me 1 second. I was going to go to the SD5, SF5. Ah, fudge. S5D. What the It's the number of stocks in the S&P above the 50-day moving average. I think it's S5 something. Yeah, S5FI. Come on, everybody knows that. 73.61% of stocks in the S&P above the 50-day and 49% above the 200. So what's interesting is this is also kind of a make or break for the market right now. We have like 50% of the stocks are at the 200 moving average, or let's just say they're less than the 200 moving average. Okay, so you've got half of them that are less than, and the other half that are more than. The 200 moving average is a pretty big buy zone indicator, and if we can get this market breadth to continue to push higher than this, okay, if it pushes higher than this, and all of a sudden we have more than 50% of the stocks above the 200-day, then I think there is more room for this market to continue to melt up. So that's why that's why I think we paused here on this 200-day indicator. Market breadth to the upside on the 50-day. I mean, this could be the timing. I mean, maybe the 50-day gets up here towards these levels where it's like, okay, a pullback is needed. You know, I mean, I don't know how aggressively I want to short the market there, but I think for at least taking some profit, reallocating, readjusting your percentages to make sure you're not overexposed and having like one stock I put 1% is up 5% of my portfolio now. I mean, scale it back, take some of those profits, protect some of those gains because a correction is likely going to happen. You know, I mean, let's look at this. Last time we had a correction here, this would have been December of 2023. Okay, so I mean, let's just say last time we got up here, December 2023, what the S&P do? December 2023, what the S&P do? S&P December 2023. That would be here. So did the market fall? Yeah, a little bit. I mean, we had this was a Santa rally, didn't appear. There's a 1.65% pullback. There is about 2.3% pullback. So it's not perfect. It's not foolproof, but still it offers pretty good timing for at least taking some profit. Okay, so we'll keep an eye on that one. Before that, in December 2023, you would have had the summer correction, which certainly was a decent one. This was a good one in July of 2023. So go back to summer 2023 on the S&P. Here you go. This is a pretty good correction. So that timing with the 50-day moving average, we had a nice pullback here. This is around 10%. So I could see that. What was this high to low? I think it was around 10%. Yeah, almost 11% high to low. from that July to August, July to September. When did this end? Yeah, July to October before we had that Q4 rip. So is it possible that we have the same type of market breadth indicator where it's like causing a bit of a toppy pattern? Maybe. Okay. So just take a note of this. End of June, big JP Morgan. It's like their giant investment fund, and they have a put side that's probably just way out of the money. That's easy peasy, but it's the call side that if it's forcing hedges around that position, they tend to usually act as a really good ceiling, and usually prices stay within those two big levels. And 59.05, from what I can see on the spot gamma, is the end of the month. So end of the month, end of the quarter would be 59.05. Okay, so I'm curious how it gets there, whether it goes up and then falls, or it goes down and stays, and then after the quarter, then it goes back up through July if we have a bullish July. Usually, last summer July was a topping month, right? Last summer the market topped out in July and fell into August. August, September historically are pretty corrective months. We have tax loss harvesting. You kind of position for Q4. So I don't know. We'll see. But we got a lot of stuff going on in July. Once we get through the holiday, we've got the tax bill. We'll see the 90-day pause window, whether it's going to be another extension or I don't know. I don't think the market's going to be breaking down, because it's like how, again, kind of self-inflicted. You put on this 90-day window and then you don't resolve anything. So what are you going to do? You buy more time. Like worst case scenario, I think Trump and co buy more time. They maybe push another 90-day extension. Maybe the market likes it, maybe it doesn't. But what will likely not happen is we're not doing this again. We're not doing like blanket trade war tariffs. We're not scaring the world again. I think that was a hard pivot. So now it's going to be, what do we have to do to kind of soothe the narrative and still growing and talking about growing our way through this deficit and growing our way through these debts, growing our way through increasing the deficits by $2.5 trillion. That's the narrative now. So to me, that looks like it's a hopeful dream, but the reality is money supply is still going to come into the markets. $2.4 trillion is still adding more liquidity to the markets, which means that's global money supply that is debasing the dollar, and that's still a good thing for gold and Bitcoin. That's still a good thing for assets like owning stocks. It doesn't have to be that hard, So the only thing I would say with a pullback would be if we take out lows, look for a pullback. That's fine. There's a lot of trade opportunities with a pullback. Okay. If we keep going higher, we're going to eventually have to have some type of corrective move. But I still look at that as so corrective move that pulls us back into where? 5,800, 5,700. And then this is a giant head and shoulders. We break this neckline, measure this thing, and there's your top. In my opinion, if I was going to be bearish in the market, it would be at the measured move and extended head and shoulders pattern. Like if we break this neckline, this thing's going, we'll go, this is a 25 to 30% move, then we could go that to the upside. Like that's what's crazy. This thing could melt up to, 7,000 plus and nobody cares. It's just what the markets can do. But if we struggle and we have some nasty corrections, then we'll deal with the volatility. But I'll end today with this. Watch that end of June level, which is only a few weeks away. But 59.05 is just a level to note. And it's just kind of, it's out there like this kind of invisible, magical resistance zone that might end up getting, prices fall back below it. Okay. All right, I'll let you go for today. Tomorrow I'm not going to be in the live session tomorrow, but I'll be back on Thursday, Friday, and we got some exciting stuff coming up. Nick and I will be doing a halfway year in review, and we'll be forecasting, kind of our future trades and strategies for the rest of the year. We also have a trading battle coming up with 8cap, which will be a lot of fun during FOMC next week. So a lot of good stuff ahead. All right, good stuff, everybody. Thanks, and we'll see you soon. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.